What's up, Internet? Tim Fogarty, Ben Ferguson here. Welcome to our weekly-ish roundup of important news in enterprise tech. We have a lot of cool stuff to talk to you guys about today. Benny, why don't you break down what we'll be talking about?
Yeah, so we have four main subjects today. First and foremost, Cisco issues a critical vulnerability warning on some of their VPN firewall routers. Second, we're going to be giving you guys some news updates on Amazon's HQ2 in Arlington, Virginia. Third, we're going to be talking about a news update on the cloud wars and what Azure is doing in the marketplace.
And last but not least, we're going to sit down with our very own Mark O'Brien and talk about the news behind the Windstream Bankruptcy. A lot of stuff going on there. Buckle up, people. Let's go. Listen up, hardware huggers. This one's for you. So your best friend Cisco's in the news right now for some not so great stuff that's going on. So Cisco released a critical patch issue warning on their RV series of their firewall, their VPN routers. So the big thing here is the vulnerability rating on this, Ben, has a 9.8 out of 10.
It's huge.
Huge.
Yeah. So basically what's happening is attackers are able to get into the underlying operating system of these routers and give themselves godlike privileges over whole corporate networks. Pretty scary stuff if you ask me.
So I think the bottom line is, IT people,
Patch it up.
All right, everyone, here's a little Cloud Wars update on all the stuff that's been going on. So Azure has been absolutely crushing it lately. They've signed big multi-year cloud partner deals with Walmart, Kroger, and the Gap stores.
So obviously Amazon was the grim reaper of the 2017-2018 retail apocalypse, where we saw over 20,000 retail locations in the US close their doors. Azure's been swooping in on that and partnering with these companies with their killer set of digital transformation solutions, helping with logistics and inventory management, as well as providing 21st century in-store experiences that modern day consumers are really looking for.
All right, we're going to touch on someone now who hasn't really been in the news that much lately, Jeff Bezos. So as many of you guys know, Amazon went to RFP for what city was going to be, the new home of their HQ2. So Ben, why don't you break down how we've gotten to where we are today?
So initially they released the RFP and over 50 cities submitted bids to be the new home of Amazon HQ2. It was narrowed down to a shorter list of 20, and then they announced finally that they were going to be going to Long Island City, New York, and Arlington, Virginia.
Last month, Amazon announced, you know what, I don't really like New York, and they decided to pull out. The big reason, tons of pushback from local politicians and local activists in New York. Shocking, right?
So now we're a couple weeks away from the March 14th vote, and Amazon's facing similar pressures from local activists in Arlington. Let me break it down for you guys. So they're going to be bringing over 20,000 jobs with an average median income of over $100,000 a year. Sure, you might see your price of your latte go up as well as housing, but they're going to bring phenomenal infrastructures and provide great support for local businesses. We think this is a great thing. Don't vote against progress, people.
Big news in the telecommunications space. Windstream files Chapter 11 bankruptcy. We had Ben sit down with our very own Mark O'Brien this week to get the lowdown in this week's Shamrock Shakedown.
So I'm here with my friend Mark O'Brien. We're going to be breaking down a quick play-by-play on the Windstream bankruptcy.
Sure. So there's no such thing as a quick play-by-play with the Windstream bankruptcy. It is nuanced, it's convoluted, and frankly, if you're kind of a nerd like me, it's pretty interesting. But we're going to try to do a Cliff Notes version here. So to understand how Windstream got to this point, how they got to the point of Chapter 11 bankruptcy, you need to understand what a sale-leaseback transaction is. So a sale-leaseback transaction is a transaction where one party sells an asset to another party, receives payment for that asset, but also has the right to lease that asset back from the buyer for a set period of time. So for example, let's say I have a bike and I want to sell that bike to you. I sell it to you for $100 and I say, Ben, not only do you owe me $100, but you also need to let me lease that bike back from you for the next 15 years. That's a sale-leaseback. Mm-hmm. Now let's also say that I have a loan and I went to a bank and I said, hey, I need $100. I'm going to pay you back with interest, but if for whatever reason I default, you can have my bike as collateral. If I made that loan, I would have an agreement that said I couldn't then subsequently devalue or sell that asset that is collateral for our loan. Well, a court ruled that that's exactly what Windstream did. So Windstream, like any other company, has bonds. They have debt that they've used to raise capital. And as part of those debt agreements, or those debt covenants, Those covenants state that they cannot sell or devalue the assets that kind of back up what makes Windstream valuable, because again, that's the collateral for their debt holders, their bondholders. But fast forward to 2015. In 2015, Windstream created a new entity, a company called Unity. They formed them as a REIT, which is a real estate investment trust. They did so for tax purposes. That is a whole other rabbit hole. But the point being, they formed Unity, and what they did was they sold Unity the vast majority of their legacy network assets, and in exchange, they received Unity stock and a lease agreement for 15 years, meaning they could lease the Unity assets or the legacy Windstream assets for 15 years. But again, they had bondholders they had to answer to, and a court ruled that that transaction was a sale-leaseback. So, in 2015, bondholders didn't have any issues with it. 2016, no issues. Windstream's issues arose in 2017 when a company, a hedge fund called Aurelius Capital Management, stepped in. They purchased a bunch of Windstream debt, and then they sued Windstream, saying that Windstream had violated their debt covenants when they undermined the value of Windstream assets by spinning off those assets to Unity in 2015. So they took them to court. Windstream had some arguments, but ultimately, a court ruled that it was indeed a sale-leaseback, that Windstream had violated their debt covenants, and that they owed Aurelius Capital Management $310 million immediately. Yes. So Windstream already wasn't in the greatest financial shape, and that kind of put them over the edge for a couple of reasons. One, it's a lot of money. Two, they were ruled to be in default, which meant their lines of credit dried up, and so they had to declare Chapter 11 to get protection from from creditors. So that's not where the carnage ends. This also affects Unity, the other party in that sale-leaseback. Again, Unity, the majority of their revenue actually comes from that lease that they established with Windstream. It's about 2/3 of their revenue. So if, for whatever reason, during the Chapter 11 proceedings, if a court rules that Windstream is relieved of some or all of their financial commitments to Unity, in other words, they can cease paying on that lease, then Unity is going to lose a huge portion of their revenue. The other potential issue for Unity is that there's speculation that the Windstream debt holders, who again it was ruled that the 2015 transaction was a sale-leaseback, could also file damages against Unity, stating essentially that they were debt holders of Windstream, and during that transaction, the value of the underlying collateral for their debt was devalued, and therefore Unity owes them damages. So, a lot of carnage.
Awesome. So, just to clear the air, because there's a lot of talk in the industry, because Crown Castle is structured as a REIT, and you see Zayo actually in the midst of splitting between a real estate investment trust for their co-location and fiber assets business and a standard commercial offering telecommunications company. Just to clear the air here, Zayo is not following the same playbook and going to be falling into the same hole.
No, not whatsoever. The issues that Windstream had were again related to that sale-leaseback transaction and them violating their debt covenants. It did not have to do with them creating a REIT. So apples and oranges.
Awesome. Thanks for the explanation.
Thanks for having me.
Love it. Thanks for joining us this week. If there's any topics you want us to cover next week, please be sure to drop those topics in the comment section below. And of course, don't forget to like, share, and hit the subscribe button. Thanks so much for joining us.